Winston Churchill once said, if you can find a way to make money while you sleep, you will never need to work again. And isn't that the truth? What I'm going to show you in the next 15 minutes or so, I'm going to show you 5 highly successful price action techniques which could change your trading performance forever. It's a complete game changer. The 5 techniques I'm going to show you are parabolic power trends, a really simple way to trade, which you can do today. Correction stop hunting. This is something that institutions do. Continuation power trends. Number 4, the chalk reversal technique. And number 5, the commodity price continuation pattern. So as I go through these, I'll be explaining each one so that you can use these if you have the price action charts, if you have the correct settings, and this is key. You will not be successful unless you have the correct settings and the correct charts. So let's go into the first technique which I'm going to show you, which is the parabolic power trend. And yes, it really is this simple. Many students say to me, Chris, can it really be this simple? And the answer is yes. Making money in the markets is very simple. Most people complicate it far too much and get overwhelmed with information overload and don't know how to trade because of that. And 90% of people who are just starting out in trading will lose all the money within 6 months. That's a fact. Ask the brokers. So what I'm going to show you is a very simple technique which I have been using for over 30 years. I've been using some of these conditions and some of these techniques for over 42 years, since 1982. So let's get on. Let me switch on this chart and tell you what is happening. So in this instance here with the Euro New Zealand, yes, it's the Euro New Zealand, we have a parallel channel here which has been drawn to the downtrend into a demand area. So we're likely that in my analysis the price is probably going to go up but could continue down. But where do we enter? Where do we buy? Where do we sell? And what are the conditions of a parabolic power trend? So let's go on to the charts. Now, before we begin, I just want to let you know that these are automated sell signals, buy signals on your chart. This is a daily chart, and this is what will be happening once you've got the price action charts and the proper settings. That is the key. We don't use normal settings here. These have been tried and tested over many years, making it highly valuable. So the first thing that I'm looking for is a sell below this blue line or a buy above this blue line, and whenever that happens, the price goes up or the price goes down. Yes, it really is that simple. Let's wind this forward and see where you think you might be getting in. This is a daily chart. Okay. It's telling you to buy with some divergence as well. Green lines indicate positive divergence, which is a powerful price action signature to tell you when to buy. In addition to that, we have this setting here which tells us when all the buys are in. Okay, all the buys are in. So we can have a look at this. Is it all green? Is it all red? Yes, it is. Yes, it is. Where's our target? 18133. Target hit. So what is this worth to you? Let's say you start off with a 10k account, demo account, let's say, and you're going to go one lot. Very reasonable. You're not risking too much. If you're going to get funded, you're only going to risk 2%. 2% is the number. If you risk any more than that and get greedy, then you won't pass phase 1 and you certainly won't pass phase 2. So this is really important and key. And in going forward, we're not showing you a technique which you can have for a couple of weeks, or 10 days. We're talking about having this technique for 10 years, 20 years, for the rest of your life. So it's really important to use the same rules over and again, and the same pattern re-emerges into the market. So what is this worth? Well, if you get in on the top of that blue line there, to the target. That's 543 pips. Now, what's 543 pips to you? If you're one lot, that's 5,430 bucks. Okay. Now, what do you have to do in order to manage this? Quite straightforward. All you do is you come in and move your stop with the blue line or just below it. Okay. How long would that take? This is a daily chart. So each one of these candles is a day. And so therefore, all you're going to do is pop in for 10 minutes anytime. Morning is a great time. Pre-London Open, you're going to move your stop. New York time, come in lunchtime, in between work maybe. After work in the evening, 10 minutes. That's all you need. You choose the time that you want. At midnight, you can come in at midnight. Doesn't matter. 10 minutes is all you need. I say 15, but hey, some people take 30 minutes. But that's all it takes. So this is a parabolic power trend. Nothing else is needed. And you have to believe it. Because if you try it for 30 days, you will not regret it. You'll realize that you're onto something big here. And parabolic trends happen more often than you think. So just be aware of that. On to number 2. So this is technique number 2, the correction stop hunter within a parabolic trend. So we're using price action charts alongside parabolic trends. Once we have a parabolic trend, we then can use price action to enter a position on several occasions if we wish. We can just use number 1, the parabolic power trend, and then just let it go. Or we can add to the positions or hold a position and get 2 to 1, 3 to 1. So let me explain this in a little bit of detail. Now the settings have to be right. We call this the stepping stone effect. And what happens within a big move, there are retail traders who are trying to grab the top and go the other way. And that's what makes the market great for us, because they're only winners and losers. People will be trying to sell the market when it's going up, and then we'll be buying into the market when the institutions are buying, and that's really important. So what we're looking for in this situation, we're looking for a correction, or what we call confluence or convergence, where the price is hitting a number of events at the same time, called convergence. So we have these automatic support areas here, as you can see. And here, stepping stone effect, as we call it, and this is indicated that price is continuing up and continuing up into the parabolic power trend. But you can see whenever this is on an hourly chart, you can see that the price often comes down and has a correction. You can see the zigzags. There's a buying opportunity there. Zigzag buying opportunity there, zigzag buying opportunity there, zigzag buying opportunity there, zigzag buying opportunity there, buying opportunity there. Not quite deep enough for me, that one. I need to see, when I see convergence, I like to see a number of events at the same time. So that's a weak buy. However, nonetheless, it did continue upwards, which is great. So how do you manage this and how do you get into the position? Very, very straightforward. A very simple, straightforward way to trade. And again, many people say this can't be this simple. And it really is, believe me. This is a game changer for many of you, and if you haven't got the consistency that you require or required in the last couple of years, or you're a complete beginner, have no doubt. Have confidence in what you're seeing, because this is exactly what happens. So you have the choice of a buy signal here and just let it go. You have a choice of a buy signal here and just let it go until you get told to sell. Okay, let's do the maths here, guys. Let's have a look now here. So if you buy here on support, on demand, yeah, just about there, let's say. and you get the sell signal, well, let's say you just lose a little bit, you give some money back to the market, which we're happy to do. Let's call that 400 pips, shall we? Just to be fair, 400 pips equals one lot, $4,000 to you. Okay, so let's do another one. There's a buy signal there, isn't there? So buy signal, hold it until you're told to sell. So this took, so there's 256 pips. Let's call it 200, shall we? $2,000. And that took 1, 2, 3, 4, say on the 5th day. Okay, on the 5th day you closed it for $200 or $2,000. Need I go on? So the correction stop hunter, I call it the stop hunter because many people will be selling this, believe it or not. There are lots of sellers here who think that the price has gone too high. They do not have the settings correct, and that is the key to your success. Having the settings, having the demand zones in the right place so you can visually see. Now if you miss that buy signal as an example, oh no, I've missed it. Get in there. Okay, get on the demand. Put your stop below here. So when you get into a position, simple, just buy, put your stop below the blue line and go for 200 pips, 240 pips, whatever you want to do. You can, of course, go for 2 to 1, but quite often within a parabolic trend, you'll be surprised how far the price does actually go. You can easily get 200 or 300 pips with each position. So don't be surprised how much money you make. So that's the correction stop hunter. So when people are selling this, they're putting their stops, they're doing the exact opposite to you. They are doing this. So they think, oh, that's gone too far. I'm going to go short. I'm going to put my stop there. I'm going to put my stop there on that swing high, etc. And they're going to get stopped out. So we're stop hunting the people who don't have the charts set correctly. So let's have a look at number 3, which is called the continuation power trend. So on to technique number 3 using the price action charts, called the continuation power trend. Okay, so we've spoken about previously in number 2 about the stepping stone effect, as you can see here. And so as the price confirms that it's going to sell off, sell off, sell off, sell off, very easy to see, very easy to follow, and you can see that the price is what we call a stepping stone effect. Now there's some really important things here, and the settings again have to be right. Make sure your settings are correct, please, because I want you to be successful. There's a couple of things to look out for, and this is the support lines and resistance lines here in green. But look at the point where they are really narrow. Look at the point where they're nearly really narrow. See how they're tightening, rather like a Bollinger Band. This means that the price is going to make a big move. This here, if you missed that one, you wouldn't miss that one, but if you did, you could wait for the tightening again here. See how wide it is there? That day, the price done nothing because this resistance line is too wide. In other words, the price is not ready to make a move yet. This tightening here, you don't even hesitate. Don't even hesitate. Wherever the price is, sell. Okay, you're going to manage this very easily. Now there's not much tightening going on, so that's a bit tighter. This one, isn't it? This one's a bit tighter than the previous day, so that would have been a good day, and the price collapsed. And the price collapsed. And the price collapsed. We're talking about many thousands of dollars here, guys. We're not just talking about a few hundred. So the continuation power trend is something you should be looking for in your 15 minutes of analysis. So as you wake up, Are these lines tightening? Sometimes they're completely flat. If they're completely flat, it's a no-brainer. Get in as quickly as you can because there's going to be a big move. And of course, it works the other way around. If the price is above support and above the blue line, then of course it's going to make a big move much higher. All right, normally. So you can see this in action here as what is this? The New Zealand Swiss. So, and this happens a lot throughout the market, throughout the day. This is a 4-hour chart, so it's not something that happens just on the 4-hour chart. These support and resistance lines happen on any time frame. So we can go down the 2-hour, we still have the same resistance lines. Nothing changes. You can go down to the hour, nothing changes. You can go down to the 5-minute, nothing changes. Okay, so you can work off any time frame. Just look out for the continuation of the power trend in terms of the tightening of the resistance lines. It's rather like a Bollinger Band if you understand Bollingers. I'm not going to go into that now, but the tighter it gets, the more explosive the move is going to be that day or certainly in the next few days. On to number 4. So in the previous technique, we talked about the price action below the blue line and heading down. Now we're talking about the 4th technique, which is called the Chock reversal technique, change of character. In other words, the price has gone down and it needs to pull back up in this instance, and of course it's the reverse for a sell if the price has gone too far. But how do we use this technique to actually decipher when it's going to actually move? We use convergence, divergence, change of character in this instance. So let me explain. In the price action charts, we automatically have divergence alerts indicated by this green line here. So in other words, this is telling you in advance that the price is going to go up. It's going to go up. It's going to do this because the price is moving down, yet the divergence indicator is saying this is wrong, something's wrong here, the price has to move up at some stage. The other thing that happens, of course, during this time, it converges into this order block here, which is automatically on your chart, and here, automatically on your chart there. The other thing that you can do is draw a trend line. Now we have automatic trend lines in our charts, so this would appear automatically if you got the settings correct. And then I've just simply drawn a little triangle there, so if you can see that. Basically what I've done is I've drawn the higher lows at the bottom and then taken it up to the top of that trend line so we can see the breakout. We clearly have a change going on here, and therefore the combination of divergence, convergence, change of character is happening. So we can actually draw some lines from this and decide that the price is probably going to have a change of character in the next few days or in the next few hours. So we're going to see something like this going on. So we can draw that in advance and we can say, okay, if this is going to change, we could have a long position on this change of character here with a stop down there and a target at the previous high up there, something like that, 2.9, can't we? So very simple, very straightforward, pending order. Now at this stage, you can say, right, okay, this is a 4-hour chart. I'm coming in 10 minutes a day, after work, before work, lunchtime, whatever time you like, midnight. And you can say, right, I'm going to now move my stop to here because the price has gone enough. I've got some nice profits on them in my account, and therefore I'm going to move my stop to 191.47, just below it, not right on it. And the price eventually goes to target. So you bank, what is that? 282 pips. 282 pips at one lot is $2,820. Okay, so it's not small. This is not just a few £100 here. This is thousands of dollars if you get it right, if you get funded. So this is really important to understand these techniques. Now, if you've got the charts, you'll know exactly what your chart looks like, and you'll understand this. Now, it doesn't come quick. It might take a few weeks for you to learn this and to upload your charts and to get the settings correctly, but that's what I'm here for. So don't be worried about that. So that is the chalk reversal technique. So look out for divergence, positive or negative. Look for the price to be hitting a major support or resistance area. Look for a breakout of any trend lines, and then you are in, or maybe on a pending order on a change of character. On to number 5, the commodity price continuation pattern. Final technique, number 5, commodity price continuation. Excuse my spelling there. Continuation pattern. And so this is commodities only. And the reason why it's commodities only is because commodities moves big. And unlike Forex, you might have to wait 2 or 3 days to bank 100 pips. You can bank 100 to 200 pips in a day with gold as an example, or silver or oil. So this works on oil, this works on silver, it works on gold. So it's totally up to you which one you want to use, but this technique's really, really good. So the first thing that you might notice is the green lines to the bottom, which are interesting because they are very strong divergence. So we have a combination of things happening here in this particular chart. We have a confluence of events happening on demand. So we have strong positive divergence, which tells us the price is going to go up, and it's hitting a very strong demand area as well. The next thing that happens is the price moves above the blue line. It's a 20 SMA. I've been using this moving average for 42 years. Highly reliable. And as a price action tool, it's really useful. So it acts as support or it acts as resistance. So you can see exactly where the price is going. So in this example, on the buy signal, if you got in there, that's worth 234 pips. 234 pips equates to $2,340, not small change. So in this technique, we're simply buying into the trend above the blue line until it reaches target. And these targets are already set. You can see this big blue order block here. It's a liquidity zone actually. So this is highly likely to sell off in the next few days. So here, for instance, at the top here, we can see, first of all, negative divergence. This tells us in advance the price is going to go down. It hit a big fat liquidity zone and the price gave way. Now the action that you don't take the trade immediately because it can continue up. Wait for the change of character, and you can wait for the break of the trend line and then go short there if you wish, or just wait for the sell signal and for the price to move below the blue line. Very straightforward, very simple. Don't complicate it. Don't make it more sophisticated than it is. Don't change the settings because they have been used for many years. So in this short position here, from let's say here down to here, is 530 pips, or to you, $5,300 in your trading account if you get funded. Or if you're running a $10,000 account, that's simply a good number to rely on. So they're the 5 techniques. I hope you enjoyed that. The VIP members know all about this. They've seen this many times before. So thank you for your support, VIP members. Thank you for the guys who've upgraded to the price action charts and the Get Funded program. The Get Funded program is a 12-month program to help you get funded and to become a successful trader. So all the links are below. If you want to join the VIP member scheme, the links are below. And I'm happy to support you on your trading journey.